This feels completely illegal to know, but I'm going to tell it to you anyway. Mortgage companies and the banks will hate this. I just talked to a client who owed $569,000 on his home. He just bought his house a few months ago. We're going to end up paying this thing off in 18 months. It'll save him over $700,000 in interest. We're not doing anything different here other than using a first lien HELOC, and we're treating it like our checking account. He's going to make his normal debits and credits, pay his bills just like he normally does, but instead of paying the bank 30 years worth of his life, we're knocking this thing out in 18 months. And if you want to learn how to do this, make sure to save this video and follow me, because I will show you examples every single day how we take normal people like you who's sick and tired of paying all this money back to the banks on your mortgage interest and paying it off in years instead of decades. Think about your current banking situation. When you get paid, your money sits in your checking account. It does absolutely nothing for you. You're not earning interest. It's not doing nothing but sitting there waiting for you to spend the money or pay off your bills. With our HELOC, anytime a deposit's made into the line of credit, we're effectively reducing our loan balance dollar for dollar, whether you deposit $1,000 or $10,000. The interest is calculated based off the average daily balance, so as your principal balance reduces, so does the amount of interest that you're paying on your mortgage. This simple strategy helps you pay off a home typically in years instead of decades. You don't have to work more overtime, you don't have to sacrifice your time away from your family. You can literally use your current banking process to work for you instead of against you. Here's his mortgage. He owes $569,000. His rate's at 6.8%. Like I said, he just bought his house. He makes about $45,000 a month. That's what gets deposited into his line of credit. He's got about $35,000 sitting in a checking account. Now I know all of you haters are going to start talking about the fact that this guy makes $45,000 a month. That's not the point of the video. The point of the video is for you to understand the strategy, because it doesn't matter if you make $5,000, $50,000, $100,000 a month. It's how the interest is being calculated that can work in your favor. So at the end of the month, after he pays for all his food, groceries, mortgages, everything, he's got $30,000 left over. Here's his current mortgage. 29 years, and you can see here he's going to pay more money in interest than what he's borrowing on his house. In our loan, we're paying it off in 18 months, saving him $727,000 in interest. The average interest rate on this loan is 8.3%, but remember, we're calculating interest on a daily basis, and we're only paying $33,000 back on this loan, which projected will give him an effective APR of 0.385% on his mortgage. If you still don't believe the banks are taking advantage of you, go look at your mortgage statement. How much of your payment goes towards principal and how much of it goes towards interest? The banks have got you trapped and brainwashed to think that a low interest rate is the best way to go. You want interest to work in your favor, and it's not even about how much money you're making. It's about how much money you can save going forward. If you knew you could potentially pay your home off in 18 months, would you rather do that or stay in a 30-year fixed mortgage? Comment below.